Okay, hello traders. Good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 29th, and heading into a massive tail end of a big event risk week. We got the BOC on tap, we got the FOMC on tap, we got non-farm payrolls into the open of October trade, and things are really interesting. Lots to look at. Good morning, Eman, Jay, Peter, Pooja, and everyone in the room. Great to see you guys. On the menu for today, obviously we start off with DXY, Euro, all the ones from last night, dollar Swiss, throwing a curveball here. Be careful there. Gold breaking down nicely. Crude breaking down. And we'll go into the previous update. So Aussie dollar, Kiwi dollar, sterling, and we'll wrap up with dollar CAD. Any other questions or trade setups? I don't see P. I do see Pete in the room. We'll add SPX there. Just working with slope here on that, Pete. And as always, questions, trade setups, feel free to throw them on the message board. So let's jump right in. DXY. So you guys know this chart. I'm going to keep it brief. This is the breakdown that we've been watching. Not really relying on this slope, but I just wanted to highlight that it's there. Basically this week, still at 97.87, which we're testing as resistance this morning. As I said in the webinar yesterday, I think I saw you all there. If a topside spike in the dollar into an event risk like this can't be outruled, okay, or ruled out rather. So if we get a move higher, the longer term scope, the only thing you need to focus on with this chart is the high week reversal close, and that's 618, and that's 98.70. Now I don't, ideally we don't get that high, but even on a weekly standpoint with where momentum is in that consolidation structure, with where price is, wouldn't be outside the realm of possibility. Ideal scenario, we see failure soon here in this zone, right in the middle of this, and we'll look at the daily chart in a moment, for the move towards 96.80, which is the 618 of the yearly range. That converges on basic slope off the yearly lows, same parallel. We talked about this yesterday as well. Basically this week into next week. Okay, so the weekly chart basically has the momentum still continuing to consolidate. We're looking for the break of these triggers. And although price has broken down, we need to see exhaustion soon. Here's what the daily chart looks like. Similar scenario in that we're coming up on a big pivot. Okay, 97.87, 618. It's the 618 of the drop off the high that we made. I'm not sure why this is not updating here. There we go. Off the high that we made back in, off the advance from the 2011 low. Okay. So I'm sorry, from the decline that we made off the 2016 high. So it's a long-term fib, okay? And we're coming up on that pivot now. So if we were to break higher, again, ideal scenario is actually 98.11. That's the 38.2 of the drop. Heading into FOMC over the next 2 days, that's basically exactly where it converges on the 75% line, and would be a really nice spot to look for exhaustion. Obviously, the move lower, you're looking for 96.96, and again, that longer term fib of the yearly range, 96.80. Intraday chart looks like this. So this could be a bear flag like right now, okay? And if we fail, basically there's 98.11 into FOMC. But if we fail, here we start to break below 97.71. That's the 2018 high, decent pivot we've been following. Even if you get dropped down to 97.43, don't get faked out. We still have to break this zone. We've been watching this zone for a while. It's been, again, I'm not sure why these charts are lagging up here with TradingView today, guys. Sorry about that. It's been a very decent pivot in price. So watch that zone, okay? Even if this flag breaks or this channel breaks, be mindful that we need to get through that to really validate the next leg lower in price. So dollar's trading in a real provocative area. The crosses look good, okay? So the majors, we'll go over that and we'll go over all of those. But heading into the FOMC and non-farm payrolls, it's definitely something to be aware of. So what are we looking for with the FOMC on tap? Uh, Here is, and I went over this with you guys yesterday. I don't want to beat a dead horse, but the one thing I wanted to note is that we're actually seeing a built-in consensus for December away slightly. This was like at 25%, I think, yesterday, away from another cut in December, which would give them that that additional quarter point to 1.5. Look, this is priced. This is all priced. Seeing this move up and down is going to be kind of inconsequential to what we hear tomorrow from Powell. So don't move on the interest rate decision, as I told you yesterday. Move on the language. We're not going to get quarterly updates, so there's not going to be the updated dot plot or projections or anything like that. We're just going to be listening to the tone on whether expectations essentially are set for next month or not, knowing that the minority here is starting to dwindle down. It's actually built up 2 points since this morning, but it's starting to dwindle down. So keep that in mind. Devil's in the details as always with this stuff. And then we'll be heading into NFPs, but we'll have another webinar on Thursday before that. So heading into the FOMC tomorrow, ideal scenario, you see some strength to fade. If we do get the continued rally or the break above 98.11, expect that you could see that bigger run towards the upper parallel. Not the ideal scenario. We're looking to fade strength. At the end of the day, a break below this zone right here would put us right back on track for those longer term targets on the downside. Questions, comments, concerns on DXY, just a broader overview heading into the FOMC here. Euro looks like this. So with the expectation that we talked about possible dollar strength a little bit earlier in the week, here's what Euro's doing. I don't know if we just missed entry. I was looking for the drop tag 110.65. I told you guys that last night, 38.2. Even deeper, okay, you have this slope. Real quick look back. Here's Euro on the weekly charts. We turned right ahead of 1186. I think that high was 11 something. What was it? 1180, 79. So we turned right ahead of that confluence region. Again, that longer term 618, shorter term of just the near term decline off the highs we made in June, turned right ahead of it. Bullish invalidation for the broader picture. Again, with major event risk, I like to give you guys the longer term targets heading in. 109.76, 109.94. Okay, the low week reversal close 618. Same exact thing as the flip side on DXY. That converges on longer term slope. We're looking for any type of spike low in the euro. That's kind of your exhaustion. Any lower than that, this thing's right back towards 108. So bullish inval for the broader picture. Breach above 112.09 is where we need to even look for a check. All of that advance, guys, would still only put us at downslope resistance. So, you know our thoughts on where we think the broader picture is here for Euro. If that was a more important, more significant low we registered in September, this is basically what needs to change. So bigger picture things here, but just wanted to kind of put the mindset here as we get into major event risk. Here's Euro on the daily chart. Pretty clean. Coming off of slope resistance earlier in October, pulling back. This is where, for me, I thought we would get a better kind of a sweet spot deal if we do get it. You're coming real close to those swing highs you made earlier in the month. It's a 38.2 of just this month's range. So you'd think this thing would at least give us a 38.2 drop before continuation. And it converges on slope. Now, I'm not like dead crazy about this slope, but it seems to be doing the job for now. Okay, you got some really nice reaction at the median line, and the median line breach accelerated as it did on the way down. That's really what I look for to validate whether a slope is kind of like actually in play. Now, it's been messy along the 25% line. Yeah, we overshot the 75% line by a little bit, but we'll work with this for now. It converges on slope, or on this fib here and these registered highs. So if we get the down drop or Euro kind of like wash out tomorrow, maybe a DXY spike higher, that's the level for me I'd ideally love to see for entries, right? On the way up, if we clear through the high day close, here's the high day reversal close. You're looking at like 111.50. That clears the way. That clears the way. Okay, for at least the near term break of this downslope. Here's the longer term slope we're looking at. But you get the picture, okay, to get resumption. Any washout below 110.65, 110.50s, I'll show you that in a moment, you're starting to risk that tumble towards 109 real quick before it reverses, 109.90s. So remember, this is still our longer term bullish invalidation. All right, so the FOMC levels are clean on DXY and Euro. Here's what the intraday start looks. Their intraday chart looks. Pooja says, moving the first point to the low from 13th September gives a much better slope, I think, on Euro. On this one right here, from the 13th of September, or I think you mean the 12th. Here's the issue. I really don't like working, and you know, Pooja, I've said this before. It might work. It might look like it's holding price action now, but I really don't like working with these very, very steep upslopes. For me, they end up being a little problematic. Let's see what it looks like on the intraday. Seems to hold the 25% line, kind of shy of the median line. Could be, Pooja. For the sake of time and where we are in like event risk time, I still think I'll work with this for now, just on the basis of the convergences that we're seeing. So, coming into basically FOMC tomorrow at like 3 o'clock, that 618 converges at 109.94. So just to give reference to the longer term picture and give respect to some of the event risk on tap, just keep that in mind. But I'll be toggling that. Thanks for bringing that up. I'll be toggling that. I think I looked at that at first. I've been stung a lot trying to play very sharp, acute angles. It just doesn't end up, the break don't tend to materialize as well, but we'll see. I mean, you could work with a slope just like this, Pooja, and would give you the same exact, essentially the essence, that's the same slope that you're looking at, right? Basic trend line support touching that low. So you can easily substitute that, but yeah, big spot for the euro. Really want to see how this pans out. Pooja says, okay, thanks. I wanted to know why you wanted to stick with this. Cheers, Pooja. I hope that helps explain stuff. The time reference of where the convergences happen are always something that we're paying attention to. So if there's a major event risk upcoming and that slope converges on a level that you're watching on a couple different time frames, sometimes it's better to work. And as I always say, when you're toggling between two slopes, Pooja, I always default to the deader slope or the one that's lesser sharp. They just, over time, I've seen that kind of reliance to go back to the bigger slope or the deader slope to be more useful. That's euro. Okay, if we wash out, you guys know the levels. There's 110.50. This is what I was saying, 110.50. There's a convergence down here. Again, in time, it's kind of kicking out. We'll be further out by then, but just something to keep in mind. Last Friday's high at 111.23 converges on, again, basic slope. Again, dismissing that spike that we got on the 24th, that slope has been in play and again converges there. So time for euro to kick into action, I think, and I hope we get it tonight, tomorrow, or not into the open of the month. One other thing, and I mentioned this yesterday, I think, in the webinar, but guys, you always know how I talk about the monthly closes, the crossovers, a time to lighten the load. Liquidity is going to thin out into these major event risk release, and you have all this portfolio adjustments or whatever you want to call it, rollovers as you head into the close of the month. Just, ease up with major event risk right on November 1st. So positioning should be lighter. Your entries should be a little bit more meticulous, right? Cherry pick them, and your stops should be tightened up rather quickly on the move because you're going to get a lot of back and forth. So fun time to trade, but also a time to be a lot more responsible on the risk management side. Dollar Swiss. So anyway, for last night's update, no change, right? To the DXY levels, we talked about that. No change to the Euro levels. We're simply just pulling back. We're right in this zone still. Here's dollar Swiss. So I thought this was a washout. And as I, I specifically even said it, I'd be heavy on this, but for the event risk that's on tap over the next, 48, 72 hours. It still looks clean, okay? But it faded a little bit higher than I wanted it to go. So here's dollar Swiss now. The whole premise is that you made a 5-day advance. This would be the 6th. You failed on Monday, right ahead of monthly open resistance, the swing highs that you made back in August. On the near term, the daily slope's a mess. The daily slope is a mess. I'll show you this in a moment again. But on the near term, even the pitchfork we were following, we spiked right through up channel resistance. Remember, uptrend resistance, if it breaches, typically will be that kick out, that accelerated rally. Didn't get that. And it doubled back to close back below that slope. So it looks like exhaustion. Still could be. We failed ahead of the highs. If you put the position on against that, you're still in it. But just know, now we're just in a consolidation right below slope resistance, and we're holding weekly open support. I wanted to see weekly open support was the first target, but I wanted to see that break to validate the exhaustion. So the exhaustion idea is still there, but the hesitation and hold of weekly open support does risk, again, one more rip higher. Maybe we do rip, okay? Maybe we do rip right into monthly open resistance tomorrow. Again, those highs from August, and then fail again. Right? That would take you into former slope support, which has been compromised already, but it converges on the October open. So I'm still thinking I want to fade strength here. The down move that we started to see, the fact that it fizzled out so quick and double backed, basically has you looking for a break of the weekly opening range. All right, so look for exhaustion here as well. If we were to breach, okay, if 97, 99.80, 99.78 gives out, you're basically looking for another tag at 618 right above parity. And that's still resistance. That would still be resistance. Even if we were to delete all of these slopes, just basic trend line, one touch, two touch, if you want to call that a third, confirmed, break, basic technical analysis, break of trend line support, check it as resistance, and be on your merry way. So you still could, see some upside here. But your stop is tight. If not for, the FOMC on top tomorrow, I'd be heavier on this. But look for a break below 99.44, the weekly open, just to get things going. Just below that, 10 pips lower, not even. If you clear the weekly opening range low, it's an objective break. Not Mike Boutros' opinion, not Jamie Setley's opinion. Price action, objectivity. Okay, so Swissy's still in a good spot. The initial pullback, if it was going to be a real nice exhaustion trade, like, I don't want to point to this, but like something like this, where you were going to get a little bit more 50, 60 pip drop, it would have been nice. But for the near term, look for a break of that range right now. So no change to the levels that we were looking at yesterday. Kind of dismiss this 99.50 level at this point. Don't even worry about it. Just look for a break of the weekly opening range. Questions on Swissy? All right, that is number 3. Number 4, gold. So here's what gold looked like last night. Loving it. You guys know the bigger picture on gold. Not even gonna hit the weekly charts because we're so far from major weekly targets, namely 1461 on the downside and 1522/26 on the upside. So no need to go over that. Here's the daily chart. And here's where we are now. So today's going to be flirting with a break. And I think it's very appropriate for gold to be doing this right ahead of the FOMC because it's just classic gold moves. Is this a true break of this basic trend line that we were looking at? I'm not really stressing it because you could be looking at this at a couple of different scenarios. Again, using the deader slope, Puja, kind of exactly what I was just telling you about. look at this. Now you got a 3-point touch if this low holds today. So gold is going to do something wicked here. All right. At the end of the day, it's pretty clear as far as what the bigger picture is. The exhaustion trade that we were looking at, we were hoping to get one more low. After that 100% extension basically hit 2 equal legs, and then this thing failed, we started to look for capitulation, more consolidation. If this holds here, you have a problem. We were looking for the break. The main break is 1490, 1489. We talked about that early in the week. Near-term upslope that we were following off the lows looks like it broke, right? Again, if you use the debtor slope here, it kind of shadows that move. So very provocative situation. If this is going to hold, I want to see spikes hold below, ideally the weekly open. Ideally 1498. That's kind of a nice pivot in price, or even 1497 on a spike. But let's just call the October high day the October high day close the weekly open, same level. Okay, they're right around that 1504, 1505 level. That's kind of where I want to see max breach on a gold rally. Downside, if that holds, if all of these holds, or even if we hold right here, I have no assumptions yet that we're heading to the US trade, except for the fact that those major levels spiked into some big levels. If this, holds here, the downside targets are unchanged. You're looking at 1478, 1479. That would just be a 1618, excuse me, 1480. Adjust that. And then 1471, 1472 is going to be, objective monthly open support, a 786 retracement on the downside. So gold, I'm thinking B wave triangle, waiting for the bigger buy though. Yeah, I could see that. I'm waiting for the bigger buy too. So for the immediate front, guys, just to be clear, I think the risk still for the spill, but the longer term is still obviously a buy in gold. As long as we were below 1535, do you think bearish view is still valid for a test of 1460 or even 1420? 1460, the first thing I'd be looking for, Eman, on the downside on a big move in gold. I don't need to tell you, you're here with us all the time. Do you remember what happened there? We had that level mapped out, and it was the launch and the low right into October. So before I look at anything sub 1420, that's going to be critical for me. And if that gives out, let's go back to the larger picture here. What's 1433? Give me the August 2013 high. Not a major high in price. But even if we break down Puja or Eman, I'm sorry, the one thing that would concern me about you even looking at 1430 is the major slope on the weekly charts. This is the daily, but 1435, those pivots, this slope, before you even look anything sub 14, that's a big level too. So just keep that in mind. If you're looking for a longer term picture or possible entries on a washout, ahead of 1420, you still have some major slope to look at. But that's really forward looking from here, right? At this point, we're looking again, even if we get a spike for exhaustion, on the downside, if this thing were to jackknife, okay, and let's say the dollar just rips and puts a lot of pressure on gold, if it were to jackknife, I'd actually be looking for possible entries on a spike here for a decent recovery. I don't know if it'll make it too high, but if that happens, these are big levels. The push down and lower has kind of been resisted in gold for a while until that spike on Friday. So on a downside move, actually, these would be decent exhaustion levels. Okay. If it happens, that will be a Halloween move, as you said yesterday. Cheers, Mike. If we get the move to 1420, agreed. Yeah, the Halloween tendency for the washout and the absolute fake out in price is definitely there. I'm just happy we made it to 1490 For me, that was a big level. The fact that we're breaking lowerly here has me just actually examining price. If you guys remember the previous update, like that was the last target, right? Because it took us right into support. Here's what it looked like right when we opened the week. That was sort of the sweet spot. So we got there and we sat there for quite some time. Here's the break and pivot. If we hold resistance, nothing changes. Okay, and this 1618 is up brought upon by the high that we made for the week into the open. So we didn't have that here. So just keep that level in mind near 1480. All right, beautiful picture on gold here. Let's see how this thing pans out into FOMC tomorrow. Here's crude, number 5. And here's the breakdown that we were looking for. Here's what the update looked like last night. Or 2 nights ago, sorry about that. No, here's last night. So a little adjustment to the slope, if you guys noticed, from last week in crude. Same reference points, only we made the shift, a modified shift. Excuse me, by the way, I'm still fighting a cold that my daughter gave me. So if you hear coarseness in my voice, it's still me recovering. Here's the reversal off the upper parallel. Again, downside break. We called the outside day reversal that we saw right off the bat yesterday was clear exhaustion. And we were looking for a break below this confluence region right here of slope. Now we're getting it now, and you're getting some follow through. So watch for this trade to continue or even to accelerate possibly. 55.38, 55.30s, I think is what I noted. Yep. Where we're looking for a reaction there. Okay, so 14.91 and the downside targets beyond here. We already hit that one. 54 is right here. Now, it's kind of a level I don't want to put too much emphasis on, except that it's a big figure and you've seen some decent pivots there. I'm not sure what is up with these charts today. There we go. It's the swing high that we made for the opening range of the month. So because we're looking at a reversal pattern, this could be an opening range reversal where here's the monthly opening range, you breach higher, and then you break back below it, invalidates the upside trend or the upside bias that it got you. Pooja says, according to Jamie, seasonality gold peaks this week and likely to be in downtrend through November. So remember that he's absolutely right. Remember the major lows. We're going to shift our focus again here outside of what we've been looking at, but the major lows in gold that we have seen. Geez, these price feeds are weak today. Maybe the weekly chart will be clearer. Here we go. The major lows that we've seen in gold over the last few years, save last year, all basically came and the washout towards the close of the year. So we always got to wash out into basically December. Last year, notwithstanding, here's the washout into December back in 2016. Here's the washout back in December in 2015, and so forth. This one came in November, if I'm not mistaken, in 2014. And we can go back. So seasonal tendencies absolutely towards the end of the year do start to kind of downtrend in gold. This is in a different scenario. I would love the break. Again, the weekly chart, Pooja, you know where we stand. We've been calling for a correction here ever since that massive outside weekly reversal or outside week that we posted back in the high in September. So we welcome that. And that would bode well. I'm just mindful of where we are in the dollar. So nice little tidbit there. Thanks for bringing that up. Crude prices. Any questions on crude before we move off? I don't know if there's much to cover here aside from essentially look for resistance right back at that 55.30 region if this pops higher. Bearish invalidation, I'll drop to the weekly open. And your next, level on the downside beyond this slope is going to be that 54 handle. Interesting to see how this pans out. But nice reversal pattern right there. Outside reversal yesterday, right off the upper parallel. Definitely worth a shot. Definitely worth a shot. Any questions on crude? All right. Previous night's update. Here's Aussie. So Aussie, on the weekly charts, just to bring things back real quick, keeping in mind that 68.95 is kind of the high that we made in September, objectively is going to take us through that parallel. We noted 69.27 as the 618 of that near-term drop. Not really crazy about that level, guys. I just, love to give considerations to major stretches. So this was simply a 4-day stretch, and we're still in that range. And for that reason, the 618 of that for me is always going to be a significant sort of threshold just to keep an eye on. So keep that in mind. 2 levels to the upside. Once we cleared, I think we get a little bit more convincing evidence that in fact we've made a more significant low here in Aussie. Weekly standpoint, right? Longer term. Bullish invalidation for the advance of the month is the low we close at 67.68. A weekly close below that level would risk resumption. Okay, so keep that in mind for Aussie. Here's the Aussie daily chart. Again, initially we were looking at this level right here at 68.09 or just lower at that confluence zone for support and resumption of the uptrend. This was what we wanted to see hold if this thing is heading higher. So here we are. Nice little vault. 68.80 on the daily chart is still big resistance. You got slope there as well, not as convincing, but a level to keep an eye on. And again, the top side breach, you're looking for that 69.27, that 6.8. Here's what the intraday chart looks like. Doesn't get much cleaner than this. Right into the open of the week, we highlighted this key region, 68.01 to 68.09. That's what you want to see hold. Beautiful peak highs, 38.2 retracement. The longer term 618 we just talked about from last month's decline, and slope support, both upslope support and downslope support. Here's what Aussie looks like now. So essentially, you're simply looking for a break of that near-term descending channel to mark resumption of the uptrend. We came into the early of the week, we just skirted it, 11 was the low. We had 68.09. Here's the move into 68.32. Okay, you saw an initial resistance break. There was the pop. Here's 68.55. Next level on the upside, 68.80. Now again, not a time to chase. If you're holding longs, I would be cleaning some up here. This is the 618 of just the near-term decline off the highs we made for the month. So you could see exhaustion here. You're seeing some divergence, price action with a higher high and a closed basis, the oscillator with a lower high. Watch out. Okay, take some off the table. I wouldn't look to short it per se, but if our favored move on the long side, we got the first long, here's the first target, do something. Take a little off the table, lighten the load, stops at break even. If you're not holding anything, or if you're looking for a fresh position, I don't think there's much for you here. I think if the dollar rallies tomorrow, you get some sort of washout here, you look for exhaustion right at the lower parallel. If not, a false break into 68 and then resumption. That's if Aussie's going to hold this uptrend. Anything sub 68, I think you're looking for a much larger correction, possibly 67.50s or below. But for now, okay, we want to see support at the uptrend or slope support. All right. Questions, comments, concerns on Aussie. We'll leave it for now. I don't want to stress 68.32 on account of the 236. I want to stress it on account of these pivots that we didn't price. Highs, highs, breakout, acceleration, low, kind of messy, but resistance, resistance, and it was the pop this week. So keep that level in mind still as support. Beautiful setup. Beautiful setup. And don't forget, I do believe we have Aussie on tap early next week. I mean, the RBA rate decision. So ongoing event risk on that front. Okay. Kiwi. You guys still involved with that? Here's number 6, number 7, Kiwi dollar. Not as clean. It started to get a little messy here. It's given off similar signals, right? I think the pullback here kind of scared me out. I don't know what to do with this at this point, but this might be a great entry in and of itself. Look, the level, just like it was 68 there on Aussie, it's right here. It's 63.50s essentially, 63.47. It's a 38.2 of the advance. Okay. Remove the shaded region here. But we're also looking at the 2016 lows. Slope support. I really wasn't, too thrilled with this slope, but what is that? Is that just false break? Do we need to just wash this out altogether? It looks kind of cleaner there that you're just coming up against upslope support. At the end of the day, this thing set a very clear and well-defined weekly opening range, and we're essentially unchanged on the week, guys. This is where we opened. So look, the broader picture for Kiwi, I still think is constructive. But I just don't know. For those of you who are in the room who were trading this yesterday, were asking about it. I just don't know if you kind of need to risk one more low first before resumption. Beautiful spot where we turned. We were crazy about it on the way towards 64.24. But this washout, the pressure has been pretty phenomenal, and in every spike, it kind of gets slammed right back lower. So you know what I mean? It's just if it just launches from here, it'd be too clean. It'd be too clean. So I'm a little more skeptical on Kiwi. I like the broader picture higher off of this slope support towards the upper parallels here, but from where we got, it's kind of. I got long on the earlier spike lower in Kiwi, but am lost with this decline now. Yeah, Pooja, I don't blame you. I don't blame you. It's not just the decline; it's how it's declining. It's how price action's reacting. You want to see order in the move. Really crazy back and forth jackknife. Those tend not to be good. Here's an example. Range, right? Range. Breaks the bottom of the range. Everyone thinks, oh, it's breaking the range to the downside. They're back in. Breaks the top of the range, right? Everyone thinks they're back in. Never lasts. But an orderly, structured, steady advance tends to have more legs. So here's an orderly, structured decline, and every rebound gets slammed. So if it doesn't spike into a new low to get entry, look for a break above the weekly opening range high, specifically like 63.80s, this zone right here, to be kind of the onset. I think we look back towards 64.30 at that point. But I'm with you on this one, Pooja. I just look for you whenever the broader medium-term picture is lost. Just break it down to what near-term price action is saying. Just look for a break of the weekly opening range. And I think if you get follow through above 63.80, there's clarity. If it spikes lower, even as low as 62.90s, let's say 63 ideally, but even if it spikes this low and then pops back higher, that might be the exhaustion. At that point, we'll buy dips. It's worth it to kind of look for clarity on a move like this, I think, in Kiwi. Because again, broader picture is very similar to Aussie, right? You're coiling off of big support. If it breaks out here, it might be a major low. This one, it's not quite near its zone of resistance, as it were. So I'm a little more hesitant here. Questions on Kiwi? Oh, you're more than welcome, Pooja. Says, okay, thanks. Cheers. Sterling, can't forget about good old pound in this environment. Here's what it looks like. It's pitiful. So, guys, we've been talking about 128.18, 128.37 for like 5 days now. And all this thing has done has repeatedly tested this thing over and over as support. So again, Kiwi levels unchanged. Just a quick reference there, all the same. Here's sterling at the start of the week. And guess what? We're 10, 15 pips higher. I wouldn't even know if I would work on this as a weekly opening range with the weekly opening range so ridiculously tight. But we're sitting at support. We're sitting at support. We're sitting at the median line. We're just moving lateral. I don't want you guys to really stress or work with this slope as something significant. It looked pretty decent all the way till the open here. I guess that would be considered a breakout. I don't know. So sterling, we're looking for clarity, but the levels are clear. We came off big resistance, or let me say that again. We came off slope resistance on the near-term chart. On the daily chart, is just a near-term pivot we eyed in price. Remember 29.90. This is a decent pivot, and the slope that we've been following. So weakness sub 128.18. You're looking for yearly open 27. I think we're looking for buys. Ultimately, we're looking to buy a larger pullback. A 38.2, the entire rally off the yearly low takes you to 26.10. I hope we don't get that low, but we're looking for exhaustion or a near-term breach of downslope resistance, which is what I was hoping this would be. We're not really getting much follow through. So the fade game that we're looking for across the board kind of still is also manifested here in sterling. Wouldn't be too upset to see a new low register first, maybe even test yearly open support, 27.54, to get entries. But just for the sake of keeping in mind, instead of last week's open, 618 comes in at 129.26. Look at that for breakout. Any questions on pound? Obviously open to a lot of event risk, but at some point this godforsaken range is going to clear. I think we'll get some clarity there. Dollar CAD, number 9. Here's Looney. I'll be putting out a piece on the weekly chart of this, basically this chart on Daily FX later today. But just recognize, is Jay in the room? Hey, Jay, you were on the webinar yesterday asking about low week closes and high week closes. Was that you? Here's a prime example, man. Here's a prime example. We're right there now. We're stuck there. 130.58 is the actual low week close level, but again, the focus on the weekly chart when you're talking about a low week close is on the close. So just to show you sort of text in work, here we are in play. So watch for this level. We'll be looking to see how the weekly close reacts at this level, but we're coming off the back of a 3-week decline, 2.2% decline in price. That's big for dollar CAD. Wouldn't be surprised to see a little bit of a bump. As we said before, we still like the downside, but bring it into the daily chart. You're at a 38.2 basic retracement of the entire advance off the lows that we made in 2000. I want to say 17, 16, 17, right? So longer term retracement. It's also the low day close for the July low, which was the yearly low day close. And you can see what price action has been doing for the last 4 days at this level. Again, bring it into a close. This is what it looks like on a line chart. Add to that you have slope. So it's make or break. If the pivot breaks below, the momentum barrier breaks 30 on a daily close and price clears 130.50, you look for resumption, 129.70, next major downside target. The lows of the year are something to consider. I don't have them here per se because we've been following the decline. I don't want to muck up the chart, but that converges on slope basically tomorrow at 130.15. But both downside targets, right? If we crack this barrier, it's just hard for me to imagine a scenario where we kind of just make this major break, No major bumps, no major corrections, no major um, sort of relief rallies, and then we break another major support level. So again, looking to fade strength, but ultimately it's about the pivot break below 30.50. Here's what it looks like on the intraday. Again, the intraday levels have just been, for the start of the week, considering it's only Tuesday, super tight. Super tight. Here's the 240, just to give you a better look. And here's what it looked like right into the start of the week. Right? So Pooja, an example of those really sharp downtrends, right? I mean, this is kind of extreme, but you did get 3 touches. So, based on technical analysis 101, that would constitute slope. And in fact, into the close of the week, you saw a touch and a touch. And when it broke, it started riding at a support. So I think it's just worth looking at, but they don't tend to give you the manifested breaks that we want to see. So keep that in mind. This pitchfork does look pretty decent. The 75%. I think this is the 618 actually. Yep. 618% of that range caught resistance. The 618 would be down near that 128.60 target, 128.84 target if we break. But we're just sitting on Fibonacci support. Resistance 31.34. Still want to see, don't stress 32.06 per se, but the upper parallel break. I still want to see this break to mark kind of larger correction. Let me take that back. If this does break, you're looking at margin correction. We don't want to see that break. Ideally, we find resistance at one of these levels for resumption on the downside. But I'm just worried here. The way that we're reacting and we're heading into the close of the month, big event risk, especially for the dollar CAD. You got the BOC tomorrow and FOMC, double whammy. Remember, we talked about double whammy jobs Friday when we get jobs reports from the NFP and Canada. That's not the case this week. It's just going to be non-farm payrolls on Friday. But instead of that, you get interest rate decisions from both. So should be an interesting day. Expect lateral price action here. This is going to thin out. You're not going to see much, or you don't typically often see much new position taking right ahead of these major releases. So watch how this reacts tomorrow. Watch how this reacts tomorrow. Big day for dollar CAD, specifically with both those interest rate decisions on tap. Questions, comments, concerns on Loonie? Heading into double interest rate decisions. Last but not least from my list, let me know if you guys have any other questions or trade setup. Pete, here's SPX. So I guess this is the 2-hour chart that we've been following. I haven't touched it. Nothing's changed. All I wanted to highlight is I didn't touch that circle. This was the 9 o'clock. This was basically what we looked at yesterday's webinar as like, hey guys, watch out because, that basic slope extension, that parallel has continued to offer some resistance. That high we registered right after the webinar was the high of the day. Okay, was the high of the day. And we've just simply been slivering lower. Not necessarily saying this is bearish, just saying, watch for the possible setback, possible test 30.20, 30.26, still support now. Okay, if this chart loads, you'll see that. And former swing highs. So point is, any higher from here, 30.80s, man. It's really tough to find anything. Here's what the daily chart looks like. I want to throw this in there too. So we haven't covered this too many times on, just because of my lack of conviction in it. But this pitchfork that we've been following, the lower parallel caught the low that we made in October just into the open. Here's the move higher. Here's the barrier break of fresh highs. I just wanted to highlight that this pitchfork registers on the daily chart somewhere in the range of like 30.50 as well. So 30.55s. So on the daily chart, if you get an intraday spike, that would be a decent slope that has offered some plays, accelerated breach, accelerated breakdown, resistance, kind of messy. But when you look at this on the daily close basis, once this reversal day closed, it was actually resistance the next day. Here's what it looks like. Don't take my word for it. Resistance, right? Resistance, accelerated breach. Once it popped lower was resistance. You know, that could be like 30.55s, kind of a hidden level, Pete, that not many people are looking at, because probably not many people are looking at this slope, but you get the picture. So I'd say 30.50s on the upside, and then beyond that, it's like 30.80s, just the extension that we've been looking for off the lows. But first things first, is this a test? Roundabout, there's the break back below 30. Could get a little bit more of a washout in US trade today. Hope that helps on SPX. All right. Any other questions before we head into FOMC tomorrow, guys? Going once, going twice. Do also keep in mind that we get some German and Euro unemployment data tomorrow, also right ahead. So if you're trading in the European block, watch for those releases. And then, yeah, the RBA is back on early next week. All right, guys, no other questions. We'll go ahead and wrap things up here. I will see you on Thursday for the next intraday strategy webinar. And we'll pick things up right ahead of the non-farm payroll on Friday. Stay nimble, stay light heading into the close of the month, and good luck trading tomorrow. See you guys on Thursday. Cheers.